Hey everybody, welcome to the channel. So today we're not going to do a stock valuation, but instead we're going to be focusing on the S&P 400 and doing some computer modeling to forecast the 52-week stock price. And then we'll compare it with the S&P 500 forecast that I did the other week. So let's jump into it. First off, for those that are not aware, the S&P 400 are the mid-cap stocks, and I'm using the MDY ETF. We can see here I already pulled in data into the weaker software, and this data is as of August 28th. And the first several columns here, this is just some macroeconomic data points. And the last column is the actual ETF closing price. So as of this past Monday, it closed at 483.23. Question marks here, this just indicates information that's not currently available, such as GDP and CPI and such. So I already ran the modeling for using two methods, random forest and M5 rule. I did that just to save some time. And we jump down 51 weeks. We can see here the projection for August 19th of next year, showing a slight or somewhat of a decline at 458. So in that high 450 range. And when we jump over to the M5 rule, so a little higher, 483. So about flat using the M5 rule, but let's take this, we'll put it into Excel, and we'll compare it with the S&P 500 I did the prior week. Here in Excel, you can see I already brought the data in from Weka for the M5 rule and ran the forest, and this data goes all the way back to January 2005. So with that, we'll jump over to the graph tab, and we'll start graphing this. All right, on the graph, I'm gonna just focus on the S&P 400 and we'll just model the two methods. First, the M5 rule. With the M5 rule grafted, we can see to the left of this vertical red line, this is the historical stock prices in blue, and to the right is the projected forecast. So judging here, not much of a movement over the next year, pretty flat. And the orange line just shows the percent change using the M5 rule. So really looking like maybe just under 2% positive to a little more than 1% negative. But let's take the ran the forest rule, and then we'll take the average because I like averaging both out because one is usually a little bearish, one's a little bullish. So I think the average is a better indication. So let's switch this over to random forest. With the random forest grafted, we can see here a little more price movement in the next couple of months, and overall for the next year, showing negative, so a little more than negative 5%, while the M5 rule was basically flat to slightly positive. Now, let's look at the average. Here we are with the average. So we can see we're kind of forecasting at minus or negative 2.5% over the next year for the S&P 400. And we're going to drop in the S&P 500 average that I did the other week so we can compare. And here we have it. So this orange line, this is the S&P 500 now. Same thing to the left of this vertical red line. That's all historical. And to the right is the forecast. The green line is the percent change for the S&P 500 during the next year. And we can see looking at it that the S&P 500 is looking to be a little more negative, a little more bearish than the S&P 400. S&P 400 was at minus 2.5%. S&P 500 about 5.61% negative. It's what the projection is showing over the next year. Since my Excel graph goes back 10 years, I'm just jumping over here to Google so we can look at a 5-year period. And from 2021, about March, April, we can see that the market has been relatively flat. Had some decline here back in late 2022, been slightly ticking up over the past couple months. But this is basically what we just saw from the weekly results for the next year. Same things. We're showing relatively flat, possibly slightly negative for the S&P 400 and even the S&P 500. So I don't think those results are unreasonable to see. Maybe next year we'll have a better idea if we're going to see the market start entering another bull run. But right now, we're just seeing another flat year. If you made it this far, hope you found it informative and beneficial. And if you have any thoughts on the outlook for the market for the next year, I would like to hear them down below. Hope to see you next time.